In equity, his net worth is just over $1.1 million. Asset, productive farmland or timberland as real asset. 11. Intellectual property, royalties, digital products. Mina, an elementary school librarian, started writing children's ebooks and creating educational printable packs in 2019. She sells on digital marketplaces. Over time, sales and royalty income grew steadily. By 2025, her digital products generate $20,000 annually royalty income. Accumulated earnings since launch total $90,000. She reinvested some into new product creation. She built savings of $60,000 from that income. Her estimated intellectual property value, based on earnings multiple, is $180,000. Combined with $250,000 in stocks and $600,000 in home equity, plus the $60,000 cash earnings, her net worth is over $1 million. Asset, digital product royalties, and self-published IP. 12. REITs, real estate investment trusts. Asset 12 is publicly traded REITs. Noah, a postal worker, began buying diversified equity REITs starting in 2016. He reinvested dividends and added $400 monthly. By 2025, his REIT portfolio is valued at $240,000, paying approximately $9,000 annual dividends. He also holds $320,000 in broad index funds, $300,000 home equity, and $50,000 in cash. Combined net worth hits $1.01 million. Asset, publicly traded real estate investment trusts. 13. Foreign currency or commodity hedge portfolios. Olga, a financial analyst, used a small portion of her savings starting in 2020 to invest in globally diversified currency hedged bond portfolios and inflation-protected commodity funds, e.g., precious metals, agriculture. She contributed $50,000 initially, then added $10,000 annually. By 2025, total value is $75,000 with modest income and protection value. Combined with $460,000 in equities, $200,000 home equity in her apartment, $280,000 in retirement savings, her net worth tops $1 million. Asset, hedged global fixed income and commodity funds. 14. Tax liens or distressed debt opportunities. Asset 14 is more specialized. Small investors buying municipal tax liens or distressed consumer debt at discount. Ethan, a legal secretary, started cautiously in 2019, investing $5,000 in small municipal tax liens purchased at public auctions. He reinvested recoveries over time and scaled to $60,000 of invested capital by 2023. Partial redemption and interest, plus secondary lien sales, produced a current portfolio value estimate of $144,000. Paired with $400,000 in conventional investments, $300,000 in home equity, $200,000 in retirement plans, and $60,000 in cash savings, he crosses the million threshold. 15 assets making normal people millionaires in 2025. In the year 2025, a growing wave of everyday individuals found themselves crossing the $1 million net worth threshold, thanks not to lottery wins or inheritance, but to smart investment in 15 specific assets. This scenario explores how typical people, teachers, nurses, taxi drivers, small business owners, office clerks, leverage these 15 assets to quietly accumulate wealth of over $1 million by mid-2025. Presented as 10 short case vignettes illustrating each of the 15 assets, the article paints a unified picture. Normal lives transformed by disciplined asset allocation, growth trends, and compound return. 1. Residential rental real estate in secondary cities. Maria, a public school teacher and single mom, purchased a 2-unit duplex in a mid-sized city in the Midwest in 2018. She used FHA financing with low down payment and rented both units. Thanks to rising rents and modest property value appreciation, by 2025, her property is worth $430,000, with remaining mortgage balance of $120,000. Equity stands around $310,000. Combined with accumulated cash flow over years, she saved $90,000 from rental net income. Her real estate holding contributed roughly $400,000 in net worth. Replicating this with a second similar duplex in 2022, she adds another $380,000 net equity plus $60,000 in saved cash flow. Altogether, real estate provided net worth of $840,000. With additional retirement savings, Maria reaches net worth of $1.1 million. Key factors: positive cash flow, small city affordability, long-term hold, slow, steady appreciation. Assets: residential rental real estate in secondary cities. 2. Index fund portfolio, low-cost ETFs. James, a warehouse logistics manager, disciplined himself to invest in broad market index funds. Starting in 2015, he put $600 monthly into low-cost ETFs tracking the S&P 500 and total stock market. By mid-2025, his portfolio grew to about $420,000. He then invested a $100,000 inheritance in 2021 into similar ETFs. That contribution grew to $145,000 by 2025. He maxed Roth IRAs annually and also added $30,000 to retirement accounts. Altogether, his index fund and retirement investments stand at $620,000. With an additional $390,000 in home equity and emergency cash, his personal net worth crosses $1 million. Asset: low-cost index ETFs and mutual funds powered by decades-long compounding. Dividend growth stocks. For asset number 3, consider Aisha, a registered nurse who began buying dividend growth stocks in 2016. She picked stable large-cap companies with long track records of increasing dividends: consumer staples, healthcare, utilities. She reinvested dividends automatically. Her portfolio cost basis of $200,000 grew to about $350,000 value by 2025, paying roughly $8,000 per year in dividends. She also secured a second job part-time and used that cash to buy more shares. By 2025, the portfolio is $420,000, and she has withdrawn nothing, just reinvested. She also keeps $80,000 in cash reserves and has $500,000 in home equity. Her total net worth is over $1 million. Asset: dividend growth equity portfolio. 4. Peer-to-peer lending, fintech credit platforms. Luca, an IT support specialist, explored fintech. In 2019, he started investing modest amounts in peer-to-peer lending platforms offering consumer and small business loans. He diversified across hundreds of small loans, average interest rates of 6 to 9%, with estimated net return around 5% after defaults. He started with $50,000 and over time reinvested repayments and interest. By 2025, his P2P lending account has grown to $78,000. In 2022, he added $50,000 more. That grew to $68,000.